The Australian stock market could fall to around 5,400 points and our miners could be in trouble. Hello and welcome to this week's Australian Stock Market Report. Now this week we'll look at the Australian miners BHP, Rio and Fortescue and how they might be affected by China, COVID-19 and Vale opening a new mine. Then we'll get into the market so I can share with you my thoughts on the Australian stock market, where it's heading, along with answering your questions and looking at stocks for you. Hello, I'm Dale Gillam, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time. This is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Well, Vale, the world's largest producer of iron ore, pellets and nickel, has approved the $1.5 billion Serra Sul 120 project in Brazil. Now, some of you may remember that in January 2019 that Vale had a disastrous dam failure that halted their operations in Brazil, which resulted in Australian mining stock prices rising strongly. Now, how did this affect our miners? Well, from January to July 2019, BHP rose over 20%, whilst Rio Tinto, that increased by 30%, and Fortescue Metals, that actually grew by a whopping 128%. Now, BHP and Rio peaked in July of 2019 before falling away, and those two miners are still trading below their highs of July 2019. That said, Fortescue, on the other hand, really did benefit more from the Vale mine shutting down, and it's up more than 80% on its July 2019 levels. Now, whilst Vale expects the project to commence in the first half of 2022, I don't believe this will be a positive move for Australian miners, especially Fortescue. Now, whilst Brazil has been hard hit with COVID-19 infections, which is slowing down Vale's attempts to get the Serra Sul 120 project up and running, the big issue facing Australian miners right now is our strained relationship with China. Currently, Australia delivers roughly 60% of the total iron ore imports to China, which puts BHP, Rio and Fortescue heavily at risk if this sort of situation changes. Now, despite the COVID-19 pandemic, exports in iron ore to China have increased by around 8%, which is good given news that China has imposed bans on beef and tariffs on our barley, not to mention the investigation into wine that caused Treasury Wines estates to fall heavily. Australia is a significant player in the world when it comes to metals, and so whilst China is not targeting our iron ore like other commodities, we do need to be prepared, as I believe Fortescue is at most at risk given that it supplies lower grade iron ore. That said, when the world moves into recovery mode from the COVID-19 recession, materials are likely to create the next boom as nations focus on infrastructure to stimulate their economies. Given this, I believe we'll see a switching of the guard from the tech bubble to the commodities in the not too distant future, and Australia is really well placed to profit from this. So what were the best and worst performing sectors last week? Well, interestingly, in a down week for the market, materials was the best sector, up almost 1%. This was followed by healthcare, not far behind, just up 0.8%. Communication services was next, down 0.5% for the week. Now, the worst performers included energy, and that was down 5.73%. Information technology was next, down 3.61%, followed by industrials down 2.79% for the week. Looking at the ASX top 100 stocks, the best performers included Whitehaven Coal, which is up over 5.29%. Rio Tinto was up 4.48%, whilst Virgin Money and Adbury were both up over 4%. The worst performers included Origin Energy, down 12.01%, IOOF was down 9.19%, and Oil Search ended the week down 8.36%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, again, our market was down last week, but how far can it fall? That's what we're going to get into now when we go and look at our charts. I've done some predictions or some predictions of where it might actually fall to and what stocks are looking a little bit weak at the moment. But let's look at the charts for the moment. I'll put my glasses on so I can actually see where I'm going. And you can see here on the screen how we've got a few weeks down. There's 14 days down. And if I go onto the daily chart, you'll see that high there was the 25th of August, and you can see it's moved down. These downward moves are a lot longer than well, let me get another, that way we go. There you go. You can see that from there to there. There's, sorry, 13 days. I counted wrong. I thought it was 14. So there you go. So we're down about 5.5% over these 13 days, but you can see here it's downward move slight and slide up. We move a big downward move over 1, 2, 3 days, and then only 2 days back up, and then 2 big days down and 1 day up, and now we've got 3 down days. So what's happening there, what you're seeing here is this tipping over, and that's suggesting more bearishness because it's got a few more days going down. But when they do retrace, it's not retracing as much as it fell. You can see here from this one here down to there, it only retraced it back about half of what it actually fell through here. So it'll be interesting to see whether we get an update on Monday here. I mean, obviously I'm recording this Monday morning, but if we get an update here or 1 or 2 updates and then see another day down. If we get a 4th day down and maybe a 5th day down, that will see an extending of this, and to say that we are really now starting to move into that low that I was expecting. And I'll just get rid of that little line there. You can see what I'm thinking of. The market will move down into this sort of low. Now, looking at where I'm thinking it might actually fall to, let me just hide this for a second. I'll get that out of the road, and I'll there we go, get that out of the road. I'll just show you what I'm thinking in terms of how it might fall. So if I'll put my little lock on there, and we go to that high there. Now, these are different levels that could find some support. So it's definitely going to go through, if it is falling down into the low, it's pretty much going to go through that 5,880 points, but I'm suggesting it could go probably at least to that 5,600 to that 5,400. I don't think, if our market's more longer term bullish or medium to longer term bullish, and we are bullish into next year, then I would suggest it's going to hold up around that 5,400 points. If it starts going below that level, then that will change my opinion just somewhat about how far we might move out of this. But again, it's all about the economics. We need to see what the economy is doing in this 3rd quarter of 2020, and obviously when Victoria gets to open up, and a whole range of things that are going around the country. So it is right now like an elastic band in terms of where the market is actually going and what's likely to do. But looking at our sectors in our market, I think I'll go back through here, not that one, not that one, not that one. Where are we? I'll go back to it and I'll show you our sectors in the Australian market. Where is it? I've forgotten where it is. Where is it? There it is. Looking at our sectors in the marketplace, you can see our information technology is really down, energy's down. I would expect some of these sectors here to start performing a little bit better than some of the other sectors that have been down. If we go into the year, you'll see here that information technology and healthcare have been the better performers, but I'd be looking at some of these bottom ones to get some opportunities. And whilst I did mention BHP and Rio there, I still think I do like BHP and Rio as companies, and I do like some of the other stocks. I do like shares like Computershare. Information technology has been quite bullish this year, but Computershare has been held back, would suggest it will play catch up there. So there's a few good stocks to look at across the market, but right now is not necessarily the time to be going in and buying stocks. Right now is the time just to sit back on your hands a little bit and watch what happens. And if the market does start to fall away this week and go down to those levels that I was mentioning, it could be that you may need to enact a stop loss or an exit strategy depending on the stocks that you have. But I'm starting to see, or I'm starting to think, that there'll be a changing of the guard from some of the small and mid-cap stocks to the bigger blue chip stocks. So expect some of those stocks to do better in the next 6 months. That's what I'm calling at the moment. So please just be very, very careful before you buy anything right now, and be ready to exit in case the fall is larger and bigger than what I'm expecting at this point in time. Because right now anything can happen, and obviously with coronavirus we can't necessarily predict what's going to happen there. We may get major outbreaks in other states in Australia which could cause us to go into a bigger lockdown in those states, and that could cause another catastrophe across industries, etc. So just be patient. Wait for the market to tell you what it's doing, and then make your decisions from there. But let's get into our questions for the day. Now, the first question we have today is from Mr. CJC, who says, "Hi Dale, could you give an update on CSL, please?" Oh, I like your stock, mate. I really do like that stock. He's giving an update on CSL, looking to own and hold for the long term. Thank you. Fan of the show. Well, thank you for being a fan of the show and thank you for supporting us. So let's go and have a look at CSL on the charts. Now, I do like CSL. Right now, it's a bit bearish, and I think Janine and I have mentioned it a couple of times on the show. You can see here how its high was way back there in February and hasn't done as well. We did get a bit of a spike there when there was talk about, you know, the COVID-19 vaccine, etc. So it has hit that spike up, which is this week here that we look at here on the 21st, or week ending the 21st of August. But it's still showing a little bit of weakness here, so I'm not suggesting it's holding up at this point in time. I think it's time to sit back and wait a little bit. If it does fall away this week, then it could find some support around the bottom there, around 270. But if it falls through that, it could go a little bit further. But looking at this stock, medium to longer term, I do like it, but it does need to have a bit of a retracement. You can see how it's just getting steeper and steeper and steeper. So I think it could come right down into sort of 200 to 220 mark over the next coming weeks and or months. But we'll see what happens. But right now, a tiny little bit too early to get into it. But keep it on your watch list because I really do like this stock, as I said. And whilst right now I wouldn't be buying into it, I'd still be having this on my watch list. So please do look after yourself on this one. Don't jump too early because you could be buying it as it's falling away. The next question we have is from Daniel. Daniel says, ETPMAG, a big long code that one is. What is your view of this ETF? Thanks. It's a silver ETF. Now, with ETFs, a lot of people know that I'm not a big fan of ETFs, but if you're looking at specialised ETFs like this is silver, gold, things like micro cap stocks, or things could be on alternative energy, those sorts of things. Areas where we're not as familiar with or the companies in them can be a lot more speculative. Sometimes we get a lot of speculative mining stocks, a lot of speculative technology stocks. So sometimes it's better to have a fund that looks after those and has numerous ones to spread the risk, and you invest in that ETF. But let's go and have a look at this particular ETF and have a look at it, because I know gold has been running quite hard for quite a while, and obviously that then would mean silver would take off after that, and you can see that's the case here with silver. It's sort of really starting to take off in July, moving up very, very vertically. So at this point in time, it just looks bullish to me. How bullish it is, that's a different question, or how long it will continue to be bullish. There's these sorts of things. These are very cyclical. You can see here back to 2009, so in the last 10 years. You can't just buy and hold a commodity like silver. You can't just buy and hold a commodity like gold. Commodities tend to be very cyclical, and it really does depend on a couple of things like the pricing of the Australian dollar against the US dollar, because these sorts of things are traded in US dollars. And also the actual commodity price itself. If there's a big demand for silver, it will go up. But then the Australian dollar could be weak or strong or weak against that, and therefore you may not get a stronger move through here. But it has gone quite vertical at this point in time. So if you're not in it, then I probably wouldn't suggest you get into it right now. I think you probably missed your run if you're not into it. The all-time high back here we can see here at 44.85. It's getting pretty close to that. But look, I'm not discounting it can continue to rise further than what it is. Now, obviously, it is an ETF. It's been around about 10 years on silver. If it does start to break through that sort of $39 mark, then that would be my signal to get in and get some exposure to this. But if it starts to fall away this week, then I wouldn't expect it to fall too far. It might get down to $29, $30, but I don't think it'd get too far further than that. But I think it's a great looking ETF at this point in time. Again, if you're not in it already, just sit back and wait for a little bit. If you aren't in it, sit back and wait for it. So if you are in it, don't sell. But if you aren't in it, don't buy right now. But wait for a trigger for it to tell you the direction it's going in. Next, we do have a question from Adam who says, "Hi Dale, I discovered your weekly stock market updates some months back and keenly wait Monday nights to watch it. Keep it up." I'd love to hear your technical analysis on Wide Open Agriculture Limited. I've never even heard of that stock. Wide Open Agriculture Limited. He said, "I don't currently own it, but would possibly be looking to hold for the medium to long term. Any thoughts would be very much appreciated." Thanks. Geez. thanks for the question on that one. Let's go and have a look at the chart. As I said, I've never heard of this stock at all, and that tells me probably why I've never heard of it. It looks like it's a very small cap, not very liquid. Let me go down to the daily chart. It's really vertical, and if you're not in it at the moment, and a lot of people say I want to get in for the medium to longer term, but again, you're not. That's just a guess about what it's likely to do. And I find a lot of people do that. They guess and they default to going medium to longer term because they don't understand the short term stuff. And I'm not saying that's the case with yourself, but just be very, very careful. I mean, looking at that, that's 741,000 odd shares at $1. So that's sort of $741,000 traded on that day. On last Friday at $247,000 traded on that day. That's very, very low liquid. And just because you can buy into a stock doesn't mean you can get out at a fair price. And it has run very, very hard at the moment. It's looking a little bit bearish. If it does break through that 99 cents or below that $1, then I would expect it to come sort of right back down into that 50 to 60 cents sort of area at this point in time. But it is looking decidedly weak over the last week or so. And the market's been a little bit weak as well, but the monthly chart it's gone too vertical. It really has gone too vertical for me. So I would be staying right out of this at the point in time. And if you are new to my reports, then you probably understand that I'm not really a big fan of these types of stocks because they really are the buy and pray. And most people trading these types of stocks buy into them and pray that they go up and they turn a good trade into a long-term buy and hold investment because they get into it and they see it just go sideways forever and a day or just go down way below their buy price. And you're far better off buying good stocks like CSL. That's just so much better. I mean, whilst I said you can't buy CSL now, but I would rather buy that for a big medium to longer term buy than this stock that you're talking about at this point in time. But again, I'm really thinking those top 10, top 20 stocks will do a little bit better over the coming 6 to 12 months. And looking at this bottom end just because they're around $1 is not necessarily a smart move. But hey, we've all got to start somewhere, don't we? And it's not that I'm against some of the smaller stocks. I do like some of the smaller stocks. I mentioned one last week on our live show. We talked about Animos. I mean, I was talking about WiseTech for a stock about 8 weeks ago before it took off. I do like some of those smaller stocks because some of them can give you good results, but you really do need to understand what you're doing, how you're going to buy it, how you're going to manage it, when you're going to sell if you get it wrong. So you need to be really good on your stop losses and your exit strategies before getting into them. But thanks for sending your questions in and thanks for watching until the end of this video. I really do appreciate it. But if you do have any questions you'd like me to answer, just stick them below and just get your fingers on that keyboard and plonk them below. Remember that we do, on this channel, we do these Monday market reports every single week. We also do our live stream every Tuesday night, 7 to 8 p.m. Australian Eastern Time. So hit that subscribe button now. Click the bell on the right of it so you know when we go live with our show and upload new videos. For now, I'm Dale Gillen, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.